Here we go. Okay, so good morning, everyone. My name is Alicia Laramie. I work for Gallagher, Flynn and Company. I'm a tax manager with them, and I focus on doing compliance work. So tax returns for corporations, S corps, partnerships, and I also focus on R&D tax credits. Amy, can you see my optimizing the R&D tax credit?
We can. It looks great.
Great. Okay, perfect. So I have been with Gallagher Flynn for 1.5 years now. Before that, I actually started with Gallagher Flynn after finishing at UVM, and I'm a Vermonter, born and raised here. I left for a little bit to California and worked for some of the bigger firms, BDO and RSM, and I was doing mainly R&D credits for them. So some extensive knowledge in the area, and I'm really excited to share some of that with you because I'd love to help out some of the entrepreneurs in the area, some of the businesses that have been around for a while that may not be taking advantage of this. So giving you some background on that, how you can qualify, how you can really take advantage of it, what kind of documentation that sometimes scares people, what's needed, that it shouldn't be scary. So those are some of the things that we're going to talk about. So starting out, just giving a quick overview of the R&D tax credit. It's a permanent incentive for companies, and the federal benefit can actually be anywhere from 5-ish cents to 11 cents on the dollar for spend that you have. So it's a pretty lucrative credit, and it's both a federal credit and a lot of states provide a credit too, based on where that work is being done, boots on ground. So we'll get into a little bit of detail about that as well. I didn't mention, I'm going to try to just run through my slides, and I will hopefully leave 5 or so minutes at the end to take any questions that you may have that we can drill into some things. And I'll also give my contact information to give you the opportunity to reach out to me. I'm happy to help out with any questions that people may have. So, all right, jumping right into it, who will qualify? So the R&D credit has really taken off of an expansiveness of who can qualify. Before, it used to be people thought it had to be people in lab coats, really doing scientific work, where it's really expanded into consumer industrial products. Obviously, there's a list there of different things, agribusiness and food and beverage. This is a big area that we've been seeing, especially in the craft brewing industry, that people may be leaving some credits on the table if you're not looking into this. Pharma and biotechnology, another one of those ones that's pretty obvious. Energy production, engineering services, and design build construction firms can qualify as well. And then another big one that we've been seeing that I focused a lot on, in addition to food and beverage, is software development. So companies that are developing software for personal and business software for sale, lease, or license, and that can also be internal use software. So a lot of different areas that can qualify. And then what are we looking at in regards to what's qualifying within the work that you're doing on a day-to-day basis? So it can be both new product development, obviously, new widgets, products, new product equipment, new production equipment that you are implementing, prototype costs, new tools and dies, and the product improvements can also qualify. And this is a big one that people miss. So it doesn't have to be just revolutionary, something brand spanking new, or something that only a few people are doing out there in the marketplace. It can also be evolutionary. So it's the next version that has new features, functionalities, making something better, faster, more stronger, more reliable. So that's something that we want to focus on when we're talking about R&D. And then also process development. So R&D processes or manufacturing processes that you are improving, that has the potential to qualify too. And wrapped in with all of that, software development qualifies in kind of all of those areas. So the big area that we look at when we're deciding what activities qualify that I'm doing on a day-to-day basis, is these are the regulations put out by the IRS. This is what we want to focus on when we are documenting the work that your teams may be doing. So number one is permitted purpose. The activity has to relate to a new or improved process, performance, reliability, quality that's going to be held for sale, lease, or license or use in your business. Technological in nature, so the activities have to rely on the principles of physical science, biological, computer, engineering science. And then the third and the fourth at the bottom, these are the big ones that really are going to help us hone in on whether an activity is going to qualify. So the activity that we're looking at has to be intended to discover some type of information to eliminate whether you're going to be able to meet or attain some requirements or specifications that you set out to attain. So if there's that inherent uncertainty at the onset of the project of, we're pretty sure we can do this, otherwise we wouldn't, put that much put many of our resources into it, but we're really not sure if we're actually going to meet all of our specs and requirements. We're not exactly sure what type of alternatives, which of the alternatives that we're using are actually going to work or meet or attain those specs and requirements. And then hand in hand with that is number 4, process of experimentation. So there has to be some type of activity that has testing. So you're testing those alternatives, testing out the uncertainty to make sure that your product is either meeting the specs or requirements, or there might be failures. And failures, a lot of people don't like to talk about their failures, but it's actually a great thing to it's a great fact pattern for the R&D credit, because it really shows that there's that inherent uncertainty. So that's the 4-part test. These slides, I wasn't going to go into too much detail of them. It just gives some examples of what are you doing in your business that may qualify. So manufacturing sometimes are some of the easier areas that we can find that work that's going on. So you're advancing the design of existing products or process, you're correcting significant design defects, designing, testing pre-production models or prototypes. All of that time and that iterative process that your team is spending can qualify for this R&D credit. And that's from the conceptual formulation all the way through the design testing and redesign. So that whole process that keeps going throughout the process. Food and beverage, again, this is an area that we've seen just take off in the past 5-10 years that I've been in R&D, that really we've been finding a lot of people don't really think about it and leave some of these credits on the table. And so ways here in the food and beverage industry that qualify are obviously designing and developing new or improved processes. If you, in the crafting, if there's new or improved hopping techniques, or if you're changing the caloric content or the alcohol content, new or improved fermentation, new or improved preservative chemicals, new ways of bottling it or packaging it to improve shelf life. All of those different activities that help to improve your process or are a launch of a new product, those can qualify for the R&D credit. And one thing that doesn't qualify here and in most areas is aesthetics. So if it's just simply a color or how it looks to a client, and this can be both in the software industry, food and beverage, manufacturing, that's not going to qualify. But once you get into the technical aspect of, we need this to taste good for our clients to actually want to buy it. So if you're talking about that flavor profile that you need to change in a technical nature, that can potentially qualify. So software development, we are, there's a lot of different areas here that can qualify. And again, there's the whole iterative process of the software development cycle that can qualify, the sprints that are going on, the new version releases that are going on. All of those new features and functions that are within that can qualify for the R&D credit, and all of the works surrounding that. So development of coming up with your specs and requirements, right from that moment that you're sitting down at the table and your post-market and consumer research, that work is going to start qualifying through design, coding, algorithms, your testing, and back to redesign if that needs to happen. So architectural designs and systems integration, middleware design, all of these things, all of these activities can qualify for the R&D credit. One area that we've seen increase is website development. I know there's been a lot of talk of that going on this morning. There is potential for qualification of website development if we're getting to a very technical nature. There is that iterative process again of coming up with how does this need to be different than what we are typically doing on a day-to-day basis. There's that inherent uncertainty in the coding and algorithms that can qualify. And the same thing goes for ERP systems. So highly technical ERP systems for companies who are, it's not something that can be picked off the shelf and they have to go through a custom design, can qualify for the credit. This is just a quick overview of architectural, engineering, and construction services that can qualify. A lot of people don't think of this as being able to qualify. I'm not going to go into details here because it's somewhat of a small industry, but it's there for if anyone wants to receive these slides. We're more than happy to send those off or have discussions with you. Non-qualified activities. This is the big area we want to focus on because there are so many activities that can qualify. So research outside of the US does not qualify. That's one of the biggest ones. The credit is for increasing research in the US. Ordinary testing or inspection of materials does not qualify. Market and consumer research, advertising, management studies, things of this nature that really don't hold that inherent development nature are what we would want to carve out. So we get into what qualifies. What do we have available? What expenses are you incurring on a day-to-day basis that actually qualify for the credit? So wages, box 1, W-2 wages are what we need to use, so taxable wages. And it can be, there's 3 different buckets. There's direct performance of that R&D, so hands-on coding, working on a prototype. Direct supervision is going to qualify as well. So not only the direct hands-on, but it can be the direct supervision of that work that qualifies as well. And then any type of support roles. Supplies used or consumed in the process all qualify for R&D. And those are items that are expensable. So things that are tangible personal property that are depreciated do not qualify, unfortunately. Hosting and cloud computing expenses, these can qualify as well. This is kind of a new thing that's come out in the last 5 to 8 years of really having a piece of the pie with software development. And then contract research can qualify. So if you are using outside contractors or outside testing facilities to perform some of these R&D activities on your behalf, they can qualify for the credit as well. There is a small haircut that the IRS requires, but they still can be highly beneficial if you are using outside testing facilities or outside contractors. Funded research, something to just hit on, that the credit, essentially what the IRS is looking for is they're looking to give people a credit who are funding their own R&D. There's really that risk, that inherent risk on the taxpayer. So if you are receiving funding on a time and materials basis, which is kind of an open-ended funding, that work is not going to qualify. But if you do have some fixed price contracts with a client, purchase orders, where they say, we'll pay you if you can show me you can do this. Those instances, there has been recent case law throughout the years that really show that that doesn't pose an issue. So that's something to keep in mind when you're thinking about what can qualify for R&D. There are this is just to kind of illustrate that the background of the credit, there's a lot of things to think about. So it's really important to include the person that's preparing your taxes for you in deciding or coming up with how should we generate the credit? What's going to generate the most advantageous credit for us? So we are looking at two different credit options, and what we do for our clients is we calculate both typically, and we say, okay, which provides the highest credit? And this can change year to year. You know, if your gross receipts drop, you may switch back and forth from regular credit looks better than the alternative simplified credit. These are all terms that, you know, clearly your tax preparer should know a little bit more about, and we won't dive into that too much. But this is something that's important to be looking at to make sure that you're not leaving anything on the table. The R&D credit utilization. So this is obviously the most important of, okay, yeah, the R&D credit is great, but how am I utilizing it? What's the actual benefit that I'm going to get from it? It's a general business credit. So it can be utilized as a general business credit. It can be carried back 1 year, and it can be carried forward for 20 years. So if you are generating NOLs currently, it can kind of be set up as it'll be saved for those 20 years, and you can use it in the future. There's a lower corporate tax rate effectively. So this effectively increases the research credits currently with the 21% tax rate that we have. And then most people may be aware that the NOL, there's an NOL limitation that was recently implemented at the beginning of this administration, where there's an 80% limit on current use of NOLs. So now the R&D credit becomes really helpful for companies that may have in the past said, well, I'm using NOLs. I don't need an R&D credit right now. So this may create R&D, that the R&D credit is more valuable to clients now. And so there's different ways that if you are listening to this presentation right now and you say, wow, I might have been missing out on credits, and I may have been in NOLs for the past 10 years, and that's why I haven't looked at this. They were kind of useless to me, R&D credits. But we are projecting that we are going to be taxable and burn through our NOLs in the next 5 years. So they're going to be beneficial. So if that's the case, there are some revenue rulings that the IRS provides that those companies can actually look back. And you can, if you've been in NOLs or you're using NOLs completely, we could actually help you look back to the beginning of time to update a carry forward schedule on a current year return to get you R&D credits for all of those years. There's also options for amending returns or just starting to look at it now of, yeah, this is something that we know in the next 5 to 10 years we're going to start being profitable. We should start looking at this now so that we don't have to do kind of this painful look back in the future. And that can save you time and money. It saves on our fees of how much time we have to spend. So that's something to keep in mind. And so all of these things are facts and circumstances that you would want to look over with your tax provider. One of the biggest things that came out of the PASS Act is the IRS understood and Congress understood that, you know, startup companies, entrepreneurs, they really were not able to receive a benefit from the R&D credit because of those NOLs that are being generated. And so those are the people that really should be benefiting from the R&D credit. So they have changed that the R&D credit can now be used towards offsetting payroll taxes. So if you are in NOLs and you're not able to use the R&D credit on a current year return, you can actually make an election on your tax return. It has to be an originally filed return. Make an election to use those R&D credits to offset payroll taxes. So completely use those R&D credits to offset future payroll taxes in the next quarter for these specific startup companies. So there are specific rules to that. There has to be gross receipts of less than $5 million. You can't have had gross receipts 5 years ago. So it is truly for startup companies, but it's something that we are seeing a lot of startup companies in the area missing out on. So if you think that may pertain to you, please reach out. I'm happy to talk about it. It's something that I hate to see, Vermont entrepreneurs, New England entrepreneurs missing out on. So that's a very big change that happened 4 years ago now, that people really need to be looking out for and using. It's cash in your hand immediately, almost. So quick rundown on state R&D credits. I'm going to talk for 1 more minute and then leave any questions, open it up to any questions. So I mentioned state R&D credits. So on top of that 5 to 11% that you could get on federal credits, there's also Vermont, New Hampshire, Maine, Rhode Island, several credits in the area. California, they're all over. Most of the states have an R&D credit of some sorts. New Hampshire is an important one to keep in mind, that there is an application process. And if you miss that application and that deadline process of June 30th, then you miss out on the credit altogether. There's no way to go back and get it. So that's something that's important to keep in mind. And then Vermont provides a credit of 27% of the federal credit that you get. So in the end, the R&D credit is a pretty lucrative credit for people that qualify for that. And the last couple of slides are on the documentation process. So many people know that these activities need to be documented in order to get the credit. Most people already have these things already set in place of, keeping notes during, keeping meeting minute notes, hand sketches, design concept drawings, testing results. It could even be as simple as emails going back and forth between the team of, hey, we found this issue, let's try XYZ. So there's a lot of different opportunities, options for what documentation can be used to substantiate the credit, so that you have that insurance policy if there were ever an audit. And as long as you have that documentation, it really reduces the risk of having an issue if an audit ever were to come up. So that concludes my presentation. So I'm leaving up my contact information. Hopefully you can see that on the screen, and I can open it up to any questions that people may have.